In this episode, I'll break down the Seek and Destroy daily profile. I'll show you how to recognize its behavior on the charts and how to use it to your advantage in trading. Similar to my previous video in this series, I'm going to focus strictly on London and the New York AM session. Those are the two sessions where most of the volatility, liquidity, runs, and meaningful delivery happen. So even when we're discussing a Seek and Destroy profile, we're still framing it around those time windows. Now, what does a Seek and Destroy profile actually look like on the daily chart? On the daily time frame, it usually forms as an indecision candle. If you're not familiar with what an indecision candle is, go back and watch my video on open, high, low, close because I break down the daily candle anatomy there in detail. But to summarize it here, an indecision candle is when price opens and closes at relatively the same level. There's no clear net directional bias by the end of the day. That doesn't mean price doesn't move. It actually means the opposite. Throughout the day, price will often expand higher, take buy-side liquidity, then reverse and expand lower, take sell-side liquidity, and by the time the daily candle closes, it ends up near where it started. So visually, you'll see wicks on both sides and a relatively small body. That's the key idea. A Seek and Destroy day is not a trend day. It's not a clean expansion day. It's a day where the market seeks liquidity on both sides and destroys traders who are positioned too heavily in one direction. Structurally, what tends to happen is London may take one side of liquidity, then New York comes in and takes the opposite side. Or New York manipulates one direction at 8:30 or 9:30, and then later in the session reverses back through the range. So instead of accumulation, manipulation, distribution in one clean direction, you get manipulation on both sides of the range. That's why on the daily chart, it prints as an indecision candle. Understanding this profile is extremely important because if you're expecting a continuation day, but the market is actually in a Seek and Destroy profile, you'll constantly get stopped out chasing direction. The key on these days is recognizing that the objective isn't expansion, it's liquidity engineering. Once you understand that, you stop forcing trend trades and instead start anticipating range-based behavior and liquidity sweeps on both sides. Now let's move into the charts and break down what this looks like in real time during London and New York. So what does this look like on the lower time frame? When you drop down, the structure becomes much clearer. We open up the day and there's no immediate direction. Price is not aggressively delivering higher or lower. It's just moving within a developing range. Then London comes in and attempts to make a move in one direction. Maybe it pushes above a high or below a low and gives the impression that we're about to get expansion. But that move doesn't follow through. Instead, it gets countered. Price falls back into the range. Then later, it may attempt to expand in the opposite direction. Again, it reaches outside of the developing range, takes liquidity, and once again gets pulled back inside. So every time price pushes outside the range, it fails to expand and instead rotates back into equilibrium. There's no sustained continuation. There's no strong displacement holding structure in one direction. That's the key characteristic of a Seek and Destroy profile on the lower time frame. You'll see liquidity taken on one side, then on the other side, but no clean directional follow-through. The market keeps reverting back into the range. It seeks liquidity above, seeks liquidity below, and destroys traders who are chasing breakouts. So instead of a clean expansion model where London sets up and New York continues, this is a day where both sessions participate in range manipulation. That's why on the daily chart it prints as indecision, and on the lower time frame it looks like constant false expansions that fail to hold structure. And really, the only difference between a bullish Seek and Destroy example and a bearish one is how the daily candle eventually closes. The internal behavior is almost identical. Price will take liquidity on both sides, rotate within a range, and fail to expand cleanly. The difference is simply whether the daily candle ends slightly above or slightly below the open. Now, how and why do these days occur? Most of the time, Seek and Destroy conditions form when the market is waiting for something. That could be high-impact news like CPI, FOMC, or NFP. Often you'll see this type of behavior the day before major data releases, when institutions are not positioning aggressively yet. The market lacks commitment, so instead of expanding, it rotates and engineers liquidity on both sides. Another reason is the lack of clear higher time frame direction. If the daily chart is sitting in the middle of a range, not at a premium or discount extreme, and there's no strong directional narrative, the intraday sessions will often reflect that indecision. One way I personally recognize this is by observing how London behaves relative to Asia. Even though my focus is primarily on London and New York, I still look at what London does in relation to the Asian range. On a seek and destroy day, London often fails to show clear direction. Instead of expanding away from Asia cleanly, London will take the Asia low and then also take the Asia high. So London essentially clears liquidity on both sides of the Asian range. When that happens, it often sets up consolidation or seek and destroy conditions going into New York. New York then continues the range behavior instead of delivering a clean expansion. Now personally, I prefer to avoid this type of price action because my focus is on expansion models. I'm looking for clean directional delivery where London sets up and New York continues. On seek and destroy days, that clarity just isn't there. But understanding it is still important, because if you can recognize when the market is likely to rotate instead of expand, you can avoid forcing trades in conditions that don't match your model. If I were going to anticipate or actually trade a seek and destroy profile, my approach would be very different from how I trade expansion days. Instead of trying to trade breakouts or continuation outside of the range, I would focus on trading back into the range. So rather than looking from the inside of the range outward, I would be looking from the outside of the range back inward. The first thing I would do is mark out the London range. Once I have the London high and low, I would draw equilibrium, identifying the premium and discount zones of that range. From the low to the high, the 0.5 level becomes the midpoint. Now, if price deviates below the London low, and I'm expecting a seek and destroy environment, I'm not anticipating a clean breakout lower. Instead, I'm expecting price to rotate back toward equilibrium. So my first target would be the midpoint of the range. If price continues oscillating, my next target could be the opposite side of the range, meaning the London highs. Because on seek and destroy days, price tends to oscillate between extremes rather than expand in one direction. For example, if price sweeps the London lows and I believe we're in consolidation conditions, I'm not looking for continuation lower. I'm looking for price to rebalance and trade back inside the range. Again, I mark equilibrium, and I look for price to trade back toward that midpoint and potentially to the opposite side. Another thing I can do is mark out the Asia range, the daily open or whatever internal range price is currently respecting. When price deviates outside of that established range, it often acts like a magnet. So when we exit the range, price tends to rebalance back into it. You can see this behavior clearly. Price exits the range, trades back into it, exits again, trades back into it. That repetitive rebalancing is a signature of seek and destroy conditions. So instead of chasing breakouts, the objective becomes fading deviations and targeting re-entry into equilibrium. Now, the last thing I want to talk about before getting into examples is another seek and destroy condition specifically for New York. In the previous explanation, we talked about London taking both sides of Asia and setting up consolidation. But there's another scenario you need to recognize. Sometimes London doesn't consolidate. Instead, London expands aggressively and creates most of the daily range by itself. So instead of sweeping both sides of Asia and staying balanced, London delivers a strong directional move and covers a large portion of what would normally be the daily range. When that happens, I don't have high expectations for New York to create another large expansion. If most of the daily range has already been built during London, the probability of New York delivering another strong move decreases significantly. Instead, what often happens is price starts to consolidate during New York. This creates low probability conditions for expansion trades. In that situation, I'm not expecting clean continuation. I'm expecting rotation, consolidation, and potentially more seek and destroy type behavior. Because of that, this is typically where I will avoid looking for trades altogether. If the expansion already happened during London, I don't want to force something in New York just because it's the New York session. Recognizing when the daily range has already been established is important because it prevents you from chasing moves in low probability conditions. So here we have our first example. Let's start the day from the Asia session. This blue box defines the Asia session, the yellow box defines London, and the red box marks the 9:30 New York Open. Since we're using a session liquidity indicator, we don't have to manually mark out the ranges. They're already defined for us. Now that Asia has played out, the first thing we want to do is observe whether we get any displacement above or below the Asia highs or lows during London. In this case, London doesn't give us a clean expansion beyond the range in a meaningful way. So we shift our focus to how New York interacts with the established range. We're specifically looking to see whether price sweeps the highs or lows of either the Asia session or the London session. You can see that price does sweep the lows. Now, based on the seek and destroy profile, what should we expect after a sweep? We're expecting price to retrace back into the range, at least to equilibrium, which is the 50% level of the defined range. So we mark out the range and draw equilibrium. Does price retrace back to the midpoint? Yes, it does. Now, does price continue strongly higher from there? Not immediately, but that's not the objective. The objective on a seek and destroy day is to trade back into the range and secure that 50% retracement. Once price hits equilibrium, we move our stop loss to break even. Risk management is key here. Then price sweeps the low again. Same process. We drop down to the 1-minute time frame and wait for confirmation. Once we get a change in the state of delivery, we can enter and once again target equilibrium. We mark equilibrium, and as you can see, price reaches it. After that, we ask whether price continues higher. This time, yes. Price pushes up and takes the London highs. Now again, same process. After we get an inverse fair value gap, we can enter and target equilibrium first. Once equilibrium is reached, stop loss goes to break even, and then we target resting sell-side liquidity. Then at the 9:30 open, price sweeps the lows again. What do? The exact same thing. We wait for confirmation, target equilibrium first, move stop loss to break even once that midpoint is reached, and then target the opposing buy-side liquidity. And as you can see, price does exactly that. This is how you use the seek and destroy profile. You're not chasing breakouts, you're fading deviations, targeting equilibrium, protecting risk quickly, and then aiming for the opposite side of the range. It looks simple when explained, but this requires a lot of practice and a lot of mental discipline. You have to be comfortable taking partial targets, moving to break even, and repeating the same process multiple times within the same day. That's how you execute seek and destroy properly. Alright, so that's the seek and destroy profile. You've seen how it works step by step. Instead of looking for expansion in one clean direction, you're identifying range conditions, waiting for liquidity to be taken on one side, and then trading back into equilibrium. First target is always the midpoint, protect your risk, and then look toward the opposite side of the range. The key here isn't complexity, it's discipline. You're not chasing breakouts, you're not forcing continuation. You're understanding when the market is likely to rotate and when expansion probability is low. If you can recognize these conditions early, you'll avoid getting chopped up trying to trade a trend that isn't there. If this helped you understand the model better, make sure to like the video and subscribe for more session-based breakdowns. Join the Telegram and Discord if you want to connect, and check out the mentorship link in the description if you want to learn directly from me. I've also left funded account discount codes below. Trade safe, stay patient, and I'll see you in the next one.